Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Tuesday, February 10th. First on the docket today, OpenAI has begun rolling out ads across its platform. Our e-commerce reporter will weigh in, and she will also share some of her new reporting on the tax challenges that could complicate OpenAI's commerce ambitions. Next up, we'll bring on our Amazon reporter to dig into her exclusive reporting about AWS's plans to launch a content marketplace for publishers to sell content to AI companies. It's also been another dramatic week for software stocks. Workday CEO is stepping down and handing the reins to the company's co-founder, while Monday.com is trying to shake off investor concerns fueled by the rising anxiety around AI. We'll talk to an analyst who has a strong point of view on all this. And finally, we will wrap the show with the latest chapter in the OpenClaw story. Our AI and robotics reporter published a new piece on how agents are improving so quickly and what that looks like on a technical level. It's going to be a fun show, so let's get right on into it. OpenAI this week said it is continuing its advertising rollout across certain accounts on its platform, and the next step after ads will likely be shopping features inside ChatGPT. My colleague Anne Guillen has done a ton of reporting on how difficult payments will be as part of that ambition, and a new story that she published today dives into how taxes are making all of this even more challenging. Joining me now is Anne to help us break it all down. Anne, welcome back to the show. It's great to have you here.
Hey, Akash, payments and taxes.
Payments and
Exciting
taxes.
stuff.
Two of the most exciting season, and as tax season comes up, it's the thing that we love to talk about here the most on the show. Before we get to that, because I know you're on the edge of your seat and you just can't be excited enough about taxes, let's talk about ads, okay? So OpenAI said this week it's continuing its rollout for ads. It's across certain accounts. Some of the accounts won't see the ads. What are your initial reactions from people you're talking to about the ads they're seeing, and also how brands are feeling about how the rollout is even going?
Yeah, so the first ads, OpenAI said went live yesterday. And so the ads will be shown to, you have to be a logged in user in the US, but they'll be shown to users that are logged in that are either on free plans or on OpenAI's new Go subscription tier, which is $8 a month in the US. So it's a little bit lower priced than kind of the full subscription. But OpenAI did also say yesterday that if you're a free user, you can opt out of seeing ads in exchange for fewer messages and a lower rate limit. So that's kind of an interesting wrinkle there. But yeah, I think most people that I'm talking to are still waiting to see how this will all play out. OpenAI is starting with a relatively small pool of advertisers, and most of the ads, or all, the ads that they're starting with, we've reported are all going to be mostly just kind of general brand awareness ads. OpenAI is charging advertisers per view, not per click, which is different than most other large ad businesses. So OpenAI has been pretty adamant that this is an early test. They're going to, see what happens and see what the reaction is like. But certainly their need for revenue is growing by the day. And so it will be interesting to see, both how users react to the ads and then also, the demand from brands as well.
I like that they doubled down on the Monday after the Super Bowl. We obviously saw that Anthropic came out with a fiery campaign that very much silently said that, hey, OpenAI is doing ads, we're not doing ads. And Monday morning, we had this blog post from OpenAI saying, you know what, we're doing it and we're going hard at it. And I didn't know the piece though that you mentioned about the fact that users can opt out for a trade-off there. And so that is certainly interesting. Let's talk about the next step after ads. So shopping is something that you've done a lot of reporting on. We've talked about how payments is so important in shopping. Your new story out today talks about how taxes makes all this even more difficult. What did you find?
Yeah, I mean, so like you mentioned, I've done a lot of reporting around kind of the data wrangling that OpenAI has had to do with merchants in order to help them, get set up to sell their products through the checkout feature in Chat GPT. And so I think the payments and the tax work and those questions that they're thinking about right now are kind of another leg of that, getting into retail and running this thing that's almost like an online marketplace. There's a lot of kind of back end work that goes into that. And so kind of the main thing that OpenAI teams working on commerce are working through right now is what is their responsibility going to be in terms of sales taxes. It's an important piece of any online marketplace. Their Amazon, very famously in the early and mid 2010s, went through kind of this whole saga about whether or not they were responsible for collecting and remitting sales taxes on behalf of the merchants selling on their platform. And ultimately, they were found to be responsible, even though their argument was kind of just like, oh, we're only connecting buyers and sellers. We're not taking an active role in the transaction. But most of the state legislatures under their laws, found that Amazon was responsible as kind of a part of this transaction for facilitating, tax payments. So it's just kind of it's another thing that OpenAI has to sort out in order to really scale up this shopping feature. And so it
And the other part too that I found interesting is that I guess it's not just who has to collect the taxes, but then it's also trying to figure out, well, where is what state is the person in when they make the purchase, which sales tax rules apply. I mean, that seems to be
right.
another intricate thing in all this.
Yeah, I spoke to a couple tax experts for this story, and kind of the main takeaway there was that the laws are all slightly different state to state. They change depending on what kind of a product you're buying, what time of year it is, whether or not there's a tax holiday. So, sorting all this out is quite complicated, and there's a reason why most other marketplaces like Amazon, have taken steps to kind of sort this out on behalf of merchants, and then also the legal responsibility that they have to pay taxes.
Now,
And
what about? I'm trying to think of the payment processors like Stripe that have a role in all of this. I mean, do they not end up carrying some of the burden here?
They do, but kind of the key distinction in a lot of these laws, they often kind of focus in on how much control an app or a payment processor has over collecting payments. And so a lot of the laws are written with this phrase, either collecting payments directly or indirectly. So you could make an argument that even though OpenAI, isn't directly touching the transaction, they still are indirectly facilitating payments, and so therefore, under these tax laws, they would be responsible. So, yes, OpenAI is working mainly with Stripe, but also is laying the groundwork to potentially work with other payment processors down the line. I touch on that in my story today a bit as well. And so, especially as OpenAI kind of lays the groundwork to work with a broader range of payments processors, I think that question of how much are they involved in the transaction, how much are they involved in payments specifically, I think that makes the tax question, all the more pressing for them.
And I guess big picture, and here, I mean, the reason that this really, I guess, matters, to the shopping story at large is I imagine, as we look to the executives that OpenAI will have to bring on to help them sort through this. I mean, I imagine this is going to be a big hiring push for them, and I'm trying to think about the people that they might seek to poach from Shopify or Amazon, et cetera. I mean, this, these are very specific skill sets that I think they're probably going to need from these larger companies.
Sure. I mean, yeah, it definitely means that they will have to think, about what their needs are in terms of people that know compliance, that know taxes, and so I think kind of this vision that maybe they started with of being this assistant layer that just sits on top of existing marketplaces, existing retailers. There's a lot more back end work that goes into e-commerce, no matter what kind of role you play. So, yes, I think you'll certainly see OpenAI invest in staffing up those teams even more going forward.
Great. Well, Anne, I want to thank you for coming on. That is Anne Guillen, our e-commerce reporter and our resident tax expert for the day here at The Information. Amazon Web Services is making a bigger bid to cozy up to publishers or the websites with original content like news outlets. The information published exclusive reporting that AWS is looking to launch a marketplace for publishers to sell their content to AI companies. Joining me now to break it all down is Catherine Perloff, our Amazon reporter. Catherine, welcome back to the show. It's great to have you here.
Yeah, gosh.
What do we know about this content marketplace that you've reported AWS is looking to launch?
Yeah, so it would be a marketplace where publishers could sell their content and firms that are either making models. We don't exactly know who the customers would be, but um, hypothetically, it'd be either firms making models or firms that sell products that have AI in them, and they would use the content in potential use cases could be fine tuning. Training in the actual responses themselves and retrieval. I mean, these are all a little bit hypothetical because we don't really know a ton of details about exactly, what the contours of the marketplace are. What we do know is that Amazon has talked to publishers about this sort of marketplace, which, yeah, as a means to help monetize publishers' content as it sort of
Hmm.
gets eaten by AI.
So big picture, I mean, this is kind of interesting, right? Because Amazon and other AI companies, they have these bespoke one-off deals with content publishers that we've seen come together with some of these news outlets. And it sort of seems to be the case that that would rely very much on the relationships that are built, between the AI companies and the publishers. Amazon is saying, hey, we're going to get everyone together and it's going to be a little bit more not automated, a little easier. You also got a hold of some of the slides that Amazon is looking to present this week at a conference about this. What did those slides say?
Yeah, so today actually, Amazon is having a publishing event, and um, they talk about a bunch in these slides of like different Amazon products that could help publishers, including like the stuff we know about like Bedrock and um, Quick Suite, these kind of just like AWS business software tools and AI tools. And among them was listed a content marketplace. So that was sort of indication that like they might be discussing this today, not exactly sure. But we do know, apart from those slides, that they have talked about this with people in the industry.
And nothing like this exists already? There's no marketplace of this kind?
Indeed, there is. So, so
Okay.
the first, I think the most relevant, example is that Microsoft is launching a similar marketplace where publishers can get paid for their AI. We first sort of heard about it late last year because People Inc., which owns like People Magazine and a bunch of other household names, said they were in the pilot program on their earnings call late last year. But actually, it was not until last week that Microsoft formally announced that they were doing this. And apart from Microsoft, Cloudflare, which is a CDN company, basically just helps websites connect with their servers, has thrown their hat in the ring as both helping publishers block AI bots and then charge for access if they actually want to let those AI bots in, as has Akamai, another CDN company. So Amazon is sort of entering this. They're not the first mover here, but they are a big and significant player. So it could be a big deal if this was able to become a scaled product.
And how have publishers reacted to those other marketplaces being set up from Microsoft, from Cloudflare? And what does that reaction tell us about how you think they'll react to Amazon's marketplace?
I think they're really excited because, there as you noted, there's been some deals, but notably with OpenAI and news publishers, but these are kind of one-off deals. A lot of them are flat fee in structure, so it's like you kind of get paid like, X million dollars over a year or something, and they're not really sustainable. Like especially when you think about publishers' traditional source of money, which is advertising. You get more ad revenue if you can get more people to look at your site. So it's a way to scale. And with these fees, I mean, with these existing deals, you're just getting kind of paid once a year, and then you have to renegotiate. The idea of a marketplace could mean the more the more that an AI company uses the publisher's content, the more money they get, which seems like a much more sustainable business model if people start getting their news and information more from chatbots. So I think there's a lot of excitement. I think, though, the details on a lot of these programs have been pretty scant. Even like Cloudflare, they were the first out of the gate coming out last July. And we still haven't seen a ton of like adoption or publishers talking about making a lot of money from them. So I think how it actually works is still a little bit of a question.
And does this help them with their end goal then of getting paid per usage, I guess, to the amount of times your content gets used? I mean, that was the end goal. Is there reason to believe that these marketplaces will help them achieve that goal?
Yeah, I think that that is the goal, and I think the idea is, like, they wanna replicate something like the way advertising technology works today, where it's kind of a
Right.
more automated way of, again, yeah, getting paid the more people use your product. I think there's always a risk of getting technology involved. I think with
Yeah.
advertising technology, we
Because
saw
then you can track everything. You can argue both sides of it. You can say, well,
exactly.
you're not worth as much as you say, really.
That and the more middlemen you have, the less dollars go to the publisher. They're gonna take
Right.
like I mean, we don't know exactly what the business model is, but that was the case with advertising
Right.
technology.
So then, I mean, on that piece here, are the AI companies, are they largely excited about this then? I mean, and I'm thinking about this also from a how much they need to pay the publisher's perspective. In some cases, I imagine it means they might have to pay the publishers more because they are prioritizing this usage-based pricing. On the other hand, I mean, it's just easier for them to get the content. I imagine they're largely pretty happy about this.
I guess I think that is the biggest question about all of this is like, I mean, AI companies, like the frontier models, they were for a while just, sucking up all this content and not paying any. So it's
Yeah.
like you already get it for free. Are you going to start paying? And I think that, so with the Microsoft example, they said that before they launched it, they tested with Copilot and they found that having publishers' content, made their consumer and enterprise versions of Copilot better. The answers were stronger. And, you do see a lot of need for data, like, companies like Scale AI or ultimately like data companies, and they're there to help AI models, have stronger answers. And what can make one model unique from the other is the data they use. On the other hand, I think there is an open question like, will AI companies see publishers as a valuable asset in this equation, given that for so long they were not really, paying for it. So
Right. And last question for you. I mean, I'm curious about the reason why Amazon is doing this. From a business perspective, how much extra revenue is this really for Amazon to play a part in all this? Are they sort of just doing this out of the goodness of their heart and wanting to be a leader in the AI publisher relationship? What's in it for them?
yeah, I mean, it's interesting. I think that like so they we don't exactly know the degree to which this is involved, but they have a service with an AWS CloudFront, and that competes with Cloudflare and Akamai. And those CDN companies haven't been like, kind of as in the spotlight recently. So it's a way to innovate in these product categories and maybe have been a little bit kind of like older tech. So there is some advantage there and like kind of competing with the market. I think also Amazon, like, I mean, it's separate from their ad business, but they've been building a really big ad business and they've been working with publishers on that. So I do think, it doesn't hurt them to have better relationships with publishers when they need them down the line to say, like, work with their ad tech or, place Amazon ads in certain places. So I think that's all the goodwill part could be part of it. But I don't think Amazon like is gonna fully do anything from the goodness of their heart. I mean,
Great. Well, Catherine, I want to thank you for coming on. That is Catherine Perloff, our Amazon reporter here at The Information. It's been another dramatic week for software stocks. Monday.com had quite the Monday. Shares fell more than 20%. Workday shares also fell after the company said it was replacing its CEO, bringing back co-founder Anil Bushri for the top job. To help us break us all down and break down the state of the sector at large, I want to bring on Rishi Jaluria, software equity research analyst at RBC Capital Markets. Rishi, welcome back to the show. It's great to have you here.
Great to be back. Thanks for having me.
Let's start with Workday. What did you make of the CEO shuffle?
Yeah, look, I think a couple of things are going on here. Number one is, Carl was brought in with a lot of fanfare, and I think he did a lot of great things in terms of building out the partner ecosystem, some of the go-to-market stuff. But I think there was recognition within the company. Number one, that growth had continued to decelerate, and you've seen that kind of show up in the stock price performance and some of the long-term targets continuing to have to be brought down. But I think there was also this, well, AI is shifting things at an exponential rate. And there was almost this perspective of, we need to bring the founder back in. We need to bring a technologist to do things. And that's increasingly kind of a thesis I think we're dealing with is this the time where you need technologists to kind of step back in to make sure these companies can invest in the right areas in AI and, cross the chasm in this post-AI world, so to speak.
So, are you expecting more CEO changes in the software sector? We've seen the carnage, and I want to talk to you about it and what you make of it all. But broadly speaking, I'm sort of trying to think. Snowflake got ahead of this early, right? They brought in Sridhar, and he was obviously from Neva. He had the AI expertise. That was before all these software stocks started tumbling, although Snowflake had been on a bit of a journey itself. Are you expecting more of these CEO changes to come?
I would expect more of this. I mean, we saw that happen with MongoDB. I thought David Ticciari was a fantastic CEO, but they brought in CJ Desai to accelerate,
Yeah.
specific initiatives. So they did that too. And in the middle of all of this, right? I mean, thankfully the stock had already been recovering under Dave, and I think CJ can maybe take it to another level. I wouldn't be surprised to see more of these CEO changes, happen with the recognition that this is unprecedented times that we're navigating through, and sometimes you need a new leader to be able to navigate that. Like, could Adobe have migrated to the cloud without Shantanu? Could Microsoft have undergone their cloud migration without Satya? Maybe not. Maybe not as successfully as they did.
Okay, so who are you watching then for these changes? I'm looking at your coverage list here. I mean, you got all the big names under your belt. Who are you watching?
Yeah, look, candidly, I know this is going to sound like a cop out, but I'm watching any company that is not founder led, right? That's where I think there's probably the biggest opportunities, because a founder, led companies, if anything, I think that, like we saw with Workday, they're kind of stepping back in, managing the roadmap, taking the long-term perspective. So I think it's the companies that maybe aren't founder led where there may be those opportunities. There's no specific names out there, but I would say non-founder led companies that have had massive underperformance in their stocks are probably going to be the ones where I think you're most likely going to see a CEO change happen.
Okay, so let's talk briefly about Monday.com. There was another name that dropped more than 20% yesterday. What did you make of the story there?
Yeah, look, I think, and candidly, I don't cover Monday.com, but I pay attention to it and cover some of their competitors as well. Look, I think it's showing us, and I would combine that along with Zoom Info reported yesterday. Their stock's down, double digits this morning as well. It's telling us that no matter how cheap any of these stocks are, if a company guides below where published consensus is, and the general viewpoint is published consensus is a conservative number and should be beatable, if you are guiding below that number, it's kind of almost a death sentence for the stock. And I think we saw that play out with Monday.com. I think we're seeing that play out with Zoom Info this morning, that you cannot guide below that. And candidly, like even an above market guide may not be enough, as we saw with Microsoft and ServiceNow. And candidly, I think public companies are in a very tricky situation where they can't guide so conservatively that their stocks get whacked because it starts to feed the AI bear cases. But if they guide too aggressively, no one's going to believe those numbers. And then if they do end up hitting them, they won't get credit because it's already in the guidance. So it's a really tricky balancing act that we're, I think, going to deal with this upcoming Q4 earnings season, both on and off cycle.
So let's go past the earnings for a minute. Let's talk about the valuations broadly. Look, there's always been a bit of a seesaw here. Are investors valuing growth? Are they valuing profitability? Which one of those is more important at any given moment? you're at a point now where I think the median software company is trading something like 3 to 4 times sales. And that is, a number we haven't really seen in a long time. But my question for you is, where are we in that valuing growth versus valuing profitability story? Is there more weight put on profitability today? Because some of the most profitable companies are still getting traded down.
Yeah. It's an interesting question and, very timely one. We actually just published a note on this exact topic, but you are seeing some of these names pull back to the point that you can value them at basically market gap price to earnings ratio. I don't know that I've ever seen this play out in software before. It's very much unprecedented times. And what's interesting is, in contrast to previous SaaS drawdowns that we've seen, like 2016 or the kind of post-COVID cloud rationalization era, numbers in general are not coming down, right? Putting aside cases like Monday and ZoomInfo, but like my numbers for Microsoft went up post that quarter in spite of the drawdown in the stock. My colleague who covers ServiceNow, his numbers went up for ServiceNow in spite of the drawdown in that stock. And I think it's telling us this is all terminal value risk. And if you really do the long term math on some of these names, they're being valued at with negative terminal value, which in other words, it's saying that this company is being valued today as if it's going to be declining in perpetuity at 5 to 10% a year. That could happen to some companies. It's not happening to every company. I think that's where it's creating some really big opportunities here.
And so, what do you think is a good median multiple then for for software company? And this is like very hard for anyone to say, really. But we're at 3 to 4 right now. The question really I'm asking, I guess, is if you think things are oversold and if you expect it to come back up. Where do you see them going from here?
I do, but I almost think when we get the bounce off the bottom, whenever that is, and look, cheap stocks can always get cheaper. But when there is that bounce off the bottom, I almost think it's going to be a little bit of a K-shaped recovery, where some companies might bounce 20, 30% off the bottom. And I think there are other companies that could be a double or triple over the next couple of years from here. And, I'm gonna give it in very broad brushstrokes, but I almost think that the quote right multiple is, maybe call it 15 to 20 times cash flow for the companies that are, the incumbents that aren't really going to be AI winners, but also aren't going anywhere. And then that number could be 30 to 40 times cash flow for companies that are going to actually be AI winners, that have innovation, that have the ability and right to get AI SKUs in the hands of customers and actually monetize that over time.
But once again, I see you prioritizing cash flow here. I mean, I see you very much talking in terms of earnings.
Yeah, and look, cash flow is what matters at the end of the day, right? And I think whenever possible, we should be valuing these companies on profitability, not on revenue. Don't get me wrong, growth is still what is most important in this world. But I think there's what we've learned, at least over the past 2 months, is if you are going to lean on margins and cash flow or earnings, you better not have egregious stock-based compensation.
Okay, and so in that K-shaped recovery, then that for software, who are your winners and who are your losers?
Yeah. In that K-shaped recovery, I think HubSpot, Intuit, MongoDB, even Microsoft could be, big bounce backs off of this. HubSpot's down 60% over the past 1 year. I actually think they have a very innovative AI roadmap under CTO and co-founder Dharmesh Shah, which gives me a lot of confidence in that company. I think there are other companies like Workday, which we opened up this talking about, that could be, 20, 30% higher than where they are right now. But I don't know that that is going to be a double or a triple. I mean, we'll see what magic Anil might be able to bring back to this business. But I don't know that this is a re-accelerating growth story. And without that, I don't know that we're going to get that sort of huge bounce back that would reward the investors that are willing to step in uncertain times like this.
And who else are you worried about besides Workday?
I'm worried about Oracle. I'm worried about, candidly, Salesforce. I think no surprise, Salesforce, and they've made a lot of efforts with Agentforce, but those efforts haven't really gotten the level of traction I think investors have wanted to see. Obviously this is almost the year that's make or break for Agentforce. I would love to see them succeed. They're my hometown company here in San Francisco, but I just haven't seen evidence of them having that kind of innovative roadmap and big customer success out of Agentforce so far. Oracle, I think, has almost backed themselves into a corner with this large OpenAI deal, and clearly, as we saw with the debt raise, they're committed to funding this and meeting those commitments. But I don't know that Oracle is going to be retracing those highs that we saw out of them, whatever, 4 or 5 months ago.
I mean, I'm just looking at your list here. So, I mean, what about some of these, I'm thinking application layer companies, like Asana, DocuSign, you know, uh, what do you make of those names?
Yeah, look, I think a lot of those could be in trouble, right? Like, I like some of the big application platform names like HubSpot, but
Yeah.
something like Asana or DocuSign that's maybe more of solving one or two problems are ones that maybe could face bigger AI risk, right? Asana, for example, I think it's a great product. It's a favorite tool here in Silicon Valley. But these AI note-taking apps, you think about things like Brunola and Otter, have gotten really good at not just summarizing, but turning that into actionable tasks. And that starts to chip away at the actual value proposition of Asana. DocuSign, obviously they're making a big efforts with IAM and these contract lifecycle management and analysis pieces. But you've seen some of that get built out of OpenAI and Anthropic. And sure, they're whatever products today, but who knows what they're going to look like in a year or two, given the rate and pace of innovation out of these. So I don't want to say these companies are necessarily in trouble, but I do have actual concerns just over that. If you're not a full robust platform, there's probably more AI risk than if you are.
Right. And as you said, a lot of this is really it's the terminal value here. It's not necessarily the near term growth prospects for the company. It's, where do they go 15, 20
Exactly.
years? And as we all know, terminal value ends up being a lot of the bottle at the end of the day. So, uh, well, Rishi, I want to thank you for coming on. It was a great conversation. That is Rishi Jaluria from RBC Capital Markets here on TITV. As the OpenClaw story continues, one of the most interesting developments has been how OpenClaw agents learn new capabilities so quickly on a technical level. Our AI and robotics reporter Rocket Drew wrote about that topic today in our AI Agenda newsletter, and I want to bring him on to tell us more about it. Rocket, welcome back to the show. It's great to have you here.
Thanks, Akash. Glad to be
2
here.
days in a row.
OpenClaw saga.
Say it again.
I'm happy to continue the OpenClaw saga here.
Well, the way things are going, Rocket, I mean, this might be a daily segment,
Okay.
So maybe make time for us is all I'm saying. Okay, so we've talked about how OpenClaw is giving people the ability to make their own agents based on this foundational framework. What your newsletter was focused on today is how those agents are getting better and how they're learning to do more things. And you gave a really great technical explanation of it in the newsletter. So explain it to us.
Yeah, absolutely. I think the reality with a lot of agents is that they just don't always get things right the first try, right out of the box when you set them loose on some task. I'll give you an example. I've asked agents to summarize the day's funding rounds for me. I say, go out on the internet, find me all of the AI funding rounds I should know about. And they make mistakes. They butcher explanations, they get details wrong. And the way I correct that is I prompt better, right? I adjust my prompt. I give it more thorough explanations. I say, these are the details I want about a company. These are the funding rounds you should pay attention to. And I refine my prompt. A skill, which is how we're teaching agents to sort of improve their expertise over time, is exactly that. It's just a text prompt stored as a markdown file on your computer. It would say something like, this is your skill for summarizing the day's funding rounds. And then before the agent goes off and pursues that task, it refreshes its memory. It reads my instructions, and it remembers all of the tips and tricks, the best techniques, the tools it should use, and then it applies that information when it goes out to complete the task. And it turns out this can really improve the agent's performance on a range of things. It could be summarizing the day's funding rounds like I'm doing. It could be transcribing a YouTube video. It could be how to use Google Cloud, how to edit a PDF. I mean, you name it, people are figuring out skills for these tasks, and now they're sharing the skills with each other. So OpenClaw in particular has a repository of these skills. It's called Claw Hub, and anyone can go along and say, look, I think I really figured out how to instruct my agent to edit a PDF. Here's my PDF editing skill, and they can share it with the world. Other people can download it, tweak it, refine it, and share it again.
Okay, so just to play it back for you. So we've got these agents that are learning how, I mean, people can create new agents with OpenClaw. These agents can do a variety of things. The way that the agents learn how to do those new things is through these skills, I guess. And there's a library of those skills. Now, one clarification question I have for you is, if I make an agent, okay, is it that to make a new agent, I have to then consult that library of skills, or is it that I already have an agent and I want it to expand its capabilities, and that's when the skill comes into play.
Exactly. It's the second. It's that once the
Okay.
agent already exists, it has this library of skills that it can draw on to accomplish different tasks. So you can think of it like when the agent is going to accomplish some task, it just sees the spine of the book. It sees the title. And if it
Right.
realizes that some skill might be relevant, it says, oh, I'm supposed to edit a PDF. Here I have a skill that's labeled PDF editing. It might open up that skill. It might load it into its context and refresh its memory on how to do that. So it has this bank of skills that are
Right.
available at any time, but they're available to the agent once the agent already exists.
And so, in other words, I basically, they call it the AI personal assistant, right? In the same way, we all have our own iPhone screen, our own Chrome, whatever. I mean, it's installing extensions basically, or apps in some ways to my AI personal assistant. I want it to not just be able to summarize the PDFs, but I also want it to be able to translate, and I also want it to be able to rearrange my desktop screen, for example. These are skills that
Exactly,
it has to learn.
exactly. And like you say, in some ways, this comes very naturally to us as humans, right? We have books on the shelf, and if we want to refresh our memory, we can take one out. Or we have a file system on our computer where we store our notes. And if we want to refresh our memory about what a conversation involved, we can take a look at those notes. Or even instruction manuals for debugging household appliances. Like when my Microsoft is when my microwave is wigging out, I like take out the microwave manual and I debug the microwave. In some ways, it's very similar to that.
Yeah. Only on TITV do we mix up Microsoft with microwaves.
That's right.
Okay, but so now my question for you is, did OpenClaw invent this system of learning new skills? Because I can certainly recall, with OpenAI, for example, I mean, we've heard these stories about, people having different GPTs and having different chatbots do different things. I mean, didn't something like this already exist?
That's right. That's right. Having custom GPTs was an early run at this idea. I think we haven't heard as much about that idea lately, but skills, I think Anthropic was the first to get there and sort of started supporting skills as a type of package that users could use with Claude Code. OpenAI also supports it with Codex, and now it's become sort of an open source standard. So there are lots of repositories and libraries online where you can find these different skills.
Now, one thing that you said in your newsletter is you called this system of consulting a library to learn new skills. You called that, you said it might seem like a duct tape solution compared to rethinking AI models from the ground up. What did you mean by that?
Yeah, absolutely. I mean, what we were just talking about, that humans sort of naturally store notes for themselves that they can consult at a later date. That's sort of the best case for skills. That's the case that makes them seem like the most natural solution for agents. On the other hand, it's a little bizarre, or like it's a little janky. It doesn't come across as an elegant solution. Think about how you would pick up a new skill. There's an example of this that I really like. Dorkesh Patel uses, like, imagine you're going to learn the saxophone. How do you learn that? You try it out. You play a few notes. You get high-level instructions from a teacher. You get low-level instructions from a teacher. You try it again. You try it again. You get better. You get faster. You get sharper. Skills are more like, instead, what if you had one student come along, they try one note, you force the student to write some notes to themselves about how they could do it better, and then a new student comes in the room, reads those notes, and tries to do the saxophone itself. And you just repeat this process. You can't imagine that the students would ever learn how to play the saxophone in a satisfying way from this process. Humans pick things up over time in a really natural and dynamic and flexible way. They try new things and explore. They're able to reflect and realize what worked for them and what didn't work for them. And they just improve over time. And that's a mode of learning that, in general, isn't available to AI systems right now. Either they learn all at once ahead of time during training, or they learn over the course of a conversation, but then the conversation ends and they typically forget everything. So skills are one sort of intermediate solution, one attempt to say, let's remember the key things that worked in this conversation so we can draw on them at a later date. But compared to the ways that humans do this over the course of learning some new task, skills can feel kind of janky. They can feel like a duct tape solution. And in fact, a lot of AI researchers are going back to the drawing board. They're saying, the existing ways that we get AIs AIs to do so-called continual learning and picking up new skills over their lifetime on the fly is just not satisfying. It's not a natural and organic solution. So, for example, we reported that Jerry Tworek's new startup, Core Automation, is going to be rethinking exactly this. They say, we just don't think this kind of learning is possible with our current AI models. And so it's back to the drawing board. We should rethink it. Skills are this kind of intermediate solution. They say, look, given the models we have now, we know they work really well when you feed them text instructions. The text instructions in some ways are quite nice. They're legible, like you or I can just open them up and see the same thing the model sees. They're easy to edit. They're easy to share. Let's see how far we can take them. So that's how skills are developing right now. But there's a question of, are they the end game solution?
And I think, one thing that is sort of connecting, and I'm connecting the dots in my mind here as you say this, I think about when I use Gemini or ChatGPT, I know that it is learning from my past conversations. It references back. I think at this point it seems to know that I host a daily show and that it has a persona. But again, that is just one skill. I mean, we're only talking about chatbots here. What we're talking about is an infinite number of capabilities really with agents, and that's where it gets more difficult.
Yeah, that's
So
exactly right. The way these chatbots store memories of you, it sort of takes a few notes to itself over time, and then it
right.
can reference those notes later. If you have a long Claude Code session and eventually the number of words that it has said sort of reaches its limit, it compacts that
Yeah,
context.
yeah.
But when it does that, still a lot gets lost, and you're really relying on the text being rich enough to remember the important things and for the model to retain the stuff that's important. And all of that means that things slip through the cracks and get lost. So I think of those in a similar category as skills, as these kind of workarounds that are getting us there for now, but they don't feel very elegant.
Okay, and last question for you, Rocket. So this ideal state that you're describing where these agents can learn on the fly and remember the right way to do things, how realistic do people think that is to attain in the near future at least?
I think estimates vary. When people are going off to found a neo lab on this basis, I think they, probably have a thesis in mind. They have a research direction that they think is promising, and they expect to make some traction on it in the next maybe months to a year. I think other people are more pessimistic and think that this is many years out, but it should be possible, right? Because people are able to do it. So that's an existence proof. So
People can do it, computers can do it.
someday.
Right, right. Great. Well, Rocket, I want to thank you for coming on. That is Rocket Drew, our AI and robotics reporter here at The Information.
Thanks, Akash.
Well, that does it for today's show. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. I want to thank you all for tuning in. We really do appreciate your viewership. I'm already excited for our next show tomorrow. Have a great rest of your Tuesday. Bye-bye for now.